In 2008, ordinary people woke up and discovered their homes were worth nothing. Their retirement savings had evaporated. Giant banks were collapsing like houses of cards. In a matter of weeks, trillions of dollars simply vanished from the global economy. And here's what's terrifying. That was only one type of economic crisis. There are at least 8 different types. Each one works differently. Each one destroys wealth in a different way. And most people can't identify a single one of them until it's too late. In the next few minutes, you're going to understand all of them. And more importantly, you'll learn to recognize the warning signs before the next disaster knocks on your door. Because here's an inconvenient truth. Right now, at this very moment, at least 2 of these types of crises are forming somewhere in the world. Let's start with the most classic, the most famous, the one everyone's heard of but almost nobody truly understands: the recession. A recession happens when a country's economy shrinks for at least 2 consecutive quarters. Sounds technical, but in practice it's simple. People stop spending, businesses stop hiring, and then people spend even less because they're scared, and businesses lay off even more because they're selling less. It's a vicious cycle that feeds on itself. Think of it this way. The economy is like a bicycle. If you stop pedaling, it doesn't stand still, it falls over. A recession is when everyone decides to stop pedaling at the same time. But a recession is the mild version of the problem. What happens when that bicycle doesn't just fall over, but plunges off a cliff? Then you have an economic depression. A depression is basically a recession that refuses to go away. It lasts years, sometimes a decade. Unemployment skyrockets to absurd levels. We're talking 25% of the population out of work. Factories shut down. Entire cities become ghost towns. The most devastating example? The Great Depression of the 1930s. It started in the United States with the stock market crash of 1929 and spread across the world like wildfire. It lasted nearly 10 years. People waited in line for hours to receive a bowl of soup. Fortunes built over generations vanished in months. And here's something most people don't know. The difference between a recession and a depression isn't just about severity, it's about psychology. In a recession, people believe the economy will recover. In a depression, they lose hope. And when hope disappears, people stop trying. And then the fall becomes even deeper. Now, these first 2 types are about the real economy, about jobs, factories, production. But there's another type of crisis that starts in a completely different place, and when it explodes, it can be even faster and even more brutal. I'm talking about the financial crash. A crash is when the stock market simply plummets. We're not talking about a 5 or 10% drop. We're talking 20, 30, 40% in days, sometimes in hours. What causes this? Usually a bubble. And that brings us to the next type of crisis, the speculative bubble. Pay close attention because this is the most treacherous type of all. A bubble forms when the price of something, stocks, real estate, tulips, cryptocurrencies, rises far beyond its real value. And it rises because everyone is buying, and everyone is buying because the price is going up. See the circular logic? It's like a game of musical chairs. Everyone's dancing and having fun until the music stops, and when it stops, there aren't enough chairs for everyone. The housing bubble of 2008 is the perfect example. Banks were lending money to anyone to buy a house. People with no income were buying mansions, and nobody worried because housing prices only went up, until the day they stopped going up, and the whole castle came crashing down. But here's the detail that connects all of this. A bursting bubble can cause a financial crash. A financial crash can cause a recession. And a recession, if severe enough, can turn into a depression. They're dominoes, and that's why understanding each piece matters so much. Now, every type I've mentioned so far has something in common. They involve things losing value. But there's a type of crisis that works in the exact opposite way. In this one, everything gets more expensive, absurdly more expensive. Hyperinflation. Normal inflation, you already know. Prices go up a little every year, 3, 5, maybe 8%. It's annoying, but manageable. Hyperinflation is something else entirely. It's when prices rise 50% in a single month, or 1,000% in a year, or, and this actually happened, billions of percent. Zimbabwe in the 2000s reached an estimated inflation rate of 79 billion percent per month. The government printed $100 trillion note banks. A single bill couldn't even buy a bread loaf. People literally used stacks of cash to start fires because the paper was worth more as fuel than as currency. How does this happen? Usually when a government prints money uncontrollably to pay off its debts. More money circulating, same amount of goods. The result? Each unit of money is worth less and less and less, until it's worth nothing. And if hyperinflation destroys money from the inside, the next type of crisis destroys money from the outside, the currency crisis. A currency crisis happens when a country's money loses value dramatically compared to other currencies. Suddenly, importing anything becomes prohibitively expensive. Companies that owe money in dollars see their debts multiply overnight. Foreign investors flee. Capital evaporates. The Asian crisis of 1997 is an iconic case. It started in Thailand when the government could not maintain the baht's peg to the dollar. The currency plunged, and like dominoes, the currencies of Indonesia, Malaysia, and South Korea fell with it. Companies that were solid on Monday were bankrupt by Friday. But wait, there's another type of crisis that's perhaps the quietest and the most political of all, the sovereign debt crisis. This happens when a government can no longer pay its debts. Sounds simple, but the consequences are catastrophic. When a country defaults, or when the market suspects it will, the interest rates that country pays to borrow money explode. And when interest rates explode, the government has to slash spending brutally. Hospitals, schools, pensions, everything goes under the guillotine. Greece lived through this between 2010 and 2015. The country owed so much that it needed to be bailed out by other European nations. In exchange, it had to implement cuts so severe that the economy shrank by 25%. A quarter of the country's wealth simply disappeared. Young Greeks emigrated in droves. Retirees saw their pensions slashed in half. And here's something most people don't know. The last type, and I saved it for last on purpose, because this is the one that's becoming increasingly relevant in the world we live in, the banking crisis. A banking crisis happens when people lose trust in banks, and in the banking system, trust is literally everything. Because here's a secret most people don't understand. Banks don't actually have your money. They lent your money to other people. If everyone tries to withdraw at the same time, the bank collapses. Simple as that. This has a name, a bank run, and once it starts, it's nearly impossible to stop, because the more people hear that a bank is in trouble, the more people rush to withdraw, and the more people withdraw, the more trouble the bank is in. It's a vicious cycle that feeds on itself. In 2023, Silicon Valley Bank in the United States collapsed in less than 48 hours. 48 hours! It was the 16th largest bank in the country on Wednesday. By Friday, it no longer existed. Clients panicked, tried to withdraw billions at the same time, and the bank simply didn't have the money. Decades of operations vanished in the blink of an eye. Now, remember when I said at the beginning that at least two types of crises are forming right now somewhere in the world? Think about the levels of government debt we're seeing globally. Think about the amount of money that's been injected into economies in recent years. Think about the bubbles that may be forming in technology markets, real estate, or artificial intelligence. The truth is that economic crises are not rare and unpredictable events. They're cycles. They happen again and again. The only variable is when and where. And the people who understand these patterns aren't immune, but they're infinitely more prepared than those caught off guard. So here's the most important lesson of all. Each of these 8 types of crises, recession, depression, financial crash, speculative bubble, hyperinflation, currency crisis, sovereign debt crisis, and banking crisis, does not exist in isolation. They connect, they feed off each other, they amplify each other. A bubble bursts, banks suffer, the government tries to bail out the banks, public debt explodes, confidence in the currency plummets, inflation skyrockets, and suddenly you have 4 or 5 crises happening at the same time. It's like a fire. A single match isn't a concern, but toss it into a room full of gasoline and everything changes. The difference between those who lose everything and those who survive a crisis isn't luck, it's knowledge. It's knowing what's happening before the music stops playing. And now you know.